What's going on, you guys? Today we got a returning special guest here, Parker. You guys probably saw him at our last podcast that we did. But today we wanted to make a video on a particular stock because today was a big day. H&R Block. And today H&R Block jumped, what was it? Like 24%?
Well, it started with trading at the after hours. Not a whole lot happened yesterday when they reported earnings, but they beat expectations, did a beat and raise. They added an extra $100 million to their share repurchase plan, which has $1.5 billion, and they still had $700 million left on it. And the $100 million extra they added is all going on the next quarter four here. And yeah, so it was a big day there, but at one point in the day today, it didn't really gain right away. But around, I want to say, what was it, like 10 o'clock this morning, it went from being up 5% to up 25%. And that's where it hung out most of the day. And it closed around 23.
Well, like right at the start of the day, it jumped like, what, 7%, when you got in?
Yeah.
Right before?
At market open, as always, Garrett and I are talking on Discord.
Like every morning?
Every morning, yeah. We talk on Discord, stocks, we have our coffee. And we always check the markets, and we're always like, oh, UNH is doing well, or this stock's doing well, or man, we're losing a lot of fucking money today.
Yeah, depending if we're dying or not.
But either way, we're looking at it, and I'm like, man, the earnings were really good, and stock's not moving much. I got to put some more money in this because this is just a stupidly good buy. I cannot pass this up, especially with the beat and raise. And I was trying to get my order book to go through. I kept placing the order, and it wasn't going through. And I couldn't figure it out. I told him, I'm like, I don't understand. I think my internet might be down or something. And all of a sudden, Garrett's like, holy crap, it's up like 20%. I'm like, and then I saw my notifications show up and order placed and went through. And I'm like, oh shit. I really hope that I didn't just buy it at like a 20% jump.
Like after.
And I looked, and it's like, no, I made an instant 10% on the jump because it executed before the big jump. So, yeah.
Yeah, if you guys bought yesterday, I mean, today you've made 24%, like in a day, which is insane. I see going back, on the charts, this stock has kind of been like on the downs ever since, what is that, May of 25. What particularly caused this to sell off?
It all started with AI.
AI, the hot buzzword.
Oh, yeah.
Everything.
Everybody loves AI.
Yeah.
But except if you're a SaaS stock.
Yeah.
Software as a service, they're getting the SaaS apocalypse. But, it's really dumbfounded. It's not anything that's actually, you got your certain companies like call centers, they're going to be replaced. But, tax professionals and, it's something like another company like Amdocs where they handle all your payment needs for if you're a big streaming giant, media conglomerate, or cell phone provider and service provider like Verizon. They handle all customer payments. And the only thing they're going to get rid of is the, telemarketer people that are in call centers,
So the whole fear was that AI was going to start replacing software as a service companies.
Yeah,
like
and
H&R
in
Block.
particularly for the tax, and in particular the tax center or the tax professionals, everybody's like they're going to get replaced. But is ChatGPT going to do my taxes? Absolutely not. Yes, IRS, you can't get me in trouble. ChatGPT did my taxes.
Yeah.
It's just not something that's going to happen. They even talked about it in their earnings call.
Oh, they did? Okay.
Oh, yeah, they did. They said that AI is going to be a tailwind. They're not losing market share. They kept market share the same. They focus on high-value customers instead of volume, the ones that are going to spend more throughout the lifetime of being a customer.
Mhm.
That's who they focus on, which I guess, in my opinion, I think is better because, volume isn't always the best. Growth at all costs isn't always, profit at all costs.
Right.
So that's a good thing there. And then even one of the analysts at the end during the Q&A session of the earnings call, they're like, I just got to point this out. Your share price of your company is really mispriced and doesn't really make any sense. I just have to bring that out because he's like, your earnings are stellar. You're trading at such a low valuation, but you're not losing any market share. You're not losing anything. So he was really happy to see that they added another $100 million to their share repurchase plan to just buy this next quarter. And he said that he thinks that's doing a really good thing. And then the board was kind of like, well, thank you. I'll give you a virtual high five for that.
Yeah. And I mean, this stock too, it was also at over a 4% dividend. This thing was also paying?
It was about, what was it? Like 6% almost. It
Oh,
was
okay. Yeah. I looked at the numbers after
5.85.
the jump.
Yeah, 5.85 or 5 point something. It was up there. And I started buying at 38, and then I bought all the way down into the 29s. I lowered my cost basis down to 32.90.
Pretty damn good.
Yeah.
So overall, about a year or 2 years of people believing companies like this are going to get replaced. Earnings came out today. Things were spectacular. You saw 25%. That's just crazy to me, man.
Even
25% in a day is
Yeah.
insane, dude. Like, that's crazy. Oh,
Even their adjusted earnings, and adjusted revenues, adjusting for their one-time tax, and it was like incentive, kind of like a one-time money generation from IRS tax restructuring. They got like 84 million or something like that. It was up in the 80 million mark. They got a bunch of money back from that. Even adjusting for that, their revenue and earnings still grew at a better than expected rate, especially their net income, which is what you want to see.
right.
Net income was up.
So a big question is, like, say someone's watching this video and they're still thinking about getting in. Is this still a good price?
I mean, it'll be interesting to see now. Normally after a 25% day, one of two things happens. Either it continues to go up with analyst revisions, or there's some profit taking.
I gotta believe that there's gonna be some profit taking.
There might be. It depends what, projections come out. But, what they say, analysts are always late to the game.
Every time.
That doesn't, you
Every
get the
time.
United Health with
Dude.
everything. But if you're going by a pure discounted cash flow analysis, if you go ultra conservative like I did on this stock, which is why I was so comfortable in buying it, it was trading at 29 at one point, and ultra conservative, requiring 10% margin of safety with zero revenue growth, flat, nothing, just zero, not any kind of keeping up with inflation, just nothing. They don't grow it, they don't shrink, they just stay the same. The company should have been valued around $45.60 a share or $45.50. Going off memory, it was in the 45s. And if you go by a slightly more industry standard approach, it's actually more like a valuation of 71 a share or 72 a share. So we looked at the industry standard discounted cash flow analysis, and it was actually my bad. It was not in the mid 70s and low 70s. It was actually 89.79. So based on how much money they actually make, for an industry standard view, you got some room to run yet, and even if you're looking at multiples, a good value base would be somewhere in the 50s. So you got some room left to run, but you're not going to get an easy 25%.
Right. Yeah. I mean, the explosions are probably done. There's always, like, you'd see near the bottom, usually you see something like that. But, I mean, the odds that you see a day like that now.
Yeah, it's a re-rate. It was a re-rating, and one could argue it's not fully re-rated yet either. I mean,
No.
again, it's trading at 36. On an ultra-conservative view, you're looking at what should be worth 45. At an industry standard, 89 isn't out of the question. But if you're going by pure multiples, your PE ratio and your different ratios, mid 50s. But relatives are kind of, I like fundamentals.
Right. Yeah. And that's kind of like, what we do, focus on fundamentals. There's so much, obviously, speculation trading out there right now, and just kind of just everything based off projections. But companies like this have strong balance sheets, just like United Healthcare, and they, eventually turn it around. And while you're waiting for them to turn it around, they pay a decent dividend. You know.
Yeah, and there's no other company quite as good in returning capital to shareholders like H&R Block either. It's kind of insane. I already said about their massive $1.5 billion share repurchase plan, but they also grow the dividend at double-digit percentage points every single year. Like
That's
clockwork,
crazy.
So you're getting in now, and last year I think they grew it by 12 or 15%, and it's probably going to be 15 to 17% this year with the earnings.
Yeah.
If you're going from a projection, we'll know in August.
Yeah.
But yeah, and then no other company either, than my knowledge, from all of the, at least in the sphere that I research stocks and where I specialize, no other company has retired nearly half of their share float in 10 years. They, because when they use share repurchases, you're buying them off the market and keeping them instead of letting them trade freely. And when they retire these shares, it boosts your ownership and the worth of the company in a certain way. It grows EPS, earnings per share,
Yep.
which it's easier to pay out larger dividends because they don't have to pay it to as many shares. So
Right.
they can grow the dividend faster, and it grows the value of your shares faster because, when it moves up, it moves up.
Oh, yeah, dude.
It's 24%
Holy
because
crap,
it's a
man.
coiled spring.
Yeah.
So they retired 50% of their all their share float, and they're only going to continue retiring shares at an increased rate if the stock stays at these depressed levels. So,
Right. Yeah.
let's take this for consideration. Their market cap is somewhere in the $3.3 billion range, not accounting for today's massive spike. If they did this and they repurchased all their shares now, theoretically speaking, they could have almost another billion of that market cap under their own control again.
Yeah.
It would have to push the share price up because there's less shares on the market, increasing scarcity. And
Right. Driving the value up.
again, they could almost rebuy back their own company and take it private just with their share repurchase plan.
That's
It's
crazy.
insane.
Yeah, that's unique. You don't see that every day. Wow.
Very
Yeah.
shareholder friendly.
Oh, yeah. They
Yeah.
like to reward their shareholders. So this was one of our picks, guys. And we're going to have other videos that come out. We're going to talk about General Mills, United Healthcare again. I made some videos probably about roughly going on a year ago now about United Healthcare where I was talking about it. It took a while for that one to come around, but you see now kind of bounces back. But again, it's just kind of based off our philosophy and value investing. But anyways, leave a comment down below what you guys think, and we'll see you guys on the next one. Have a good one.